The Reserve Bank leaves interest rates on hold, providing some relief to Australia's 3.2 million mortgage holders. ANZ's bid for Suncorp's banking business receives a setback, and Canberra bans TikTok on government devices. It's Wednesday, the 5th of April, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you have an interview coming up with Diana Messina, Deputy Chief Economist at AMP.
That's right. All about the big news yesterday from the Reserve Bank. They did not lift interest rates. First time in 11 meetings that they didn't lift rates. And we talked to Diana all about why they made that decision and whether or not we can be comfortable about no more rate rises. Bad news on that front, Michael.
Well, that is our main story this morning, Sean. And you say the first time in 11 meetings. There's so many different ways that you can kind of characterise this. This was also the first pause in the rising rate cycle in a year, with the Reserve Bank leaving the official cash rate on hold at 3.6% yesterday. But, as you say, Sean, it's not necessarily good news coming up, because the Central Bank Board warns more rate hikes are likely.
Yes. Now, obviously, the 3.2 million mortgage holders across the country, we're pretty happy about the fact that there was no rate rise yesterday, though perhaps not many older Australians who rely on term deposits and the higher interest rates that are offered there. If you ever want to read the money paragraph in the board's communique after its monthly meeting, you go to the final paragraph. Yesterday, the paragraph read that the board expects some further tightening of monetary policy to get inflation back to the central bank's target range of between 2 and 3%. But by holding rates steady, the board gets more time to assess the state of the economy and the outlook. It says there's plenty of uncertainty out there, and we'll be paying very close attention to developments in the global economy, trends in household spending, and the outlook for inflation and the labour market.
So they've kind of really given us a bit of a checklist as to what to keep an eye on: the global economy, how much people are spending, what's happening to inflation, and the outlook for the labour market.
That's exactly right. The central bank also gave its view of what's going on yesterday. Very helpful. It said global inflation remains high, but global growth is subdued, with below average growth expected this year and in 2024. That really should help get inflation down. The recent banking system woes will also be a headwind to growth, the bank said. The Reserve reckons inflation has peaked here and the prices of goods are expected to moderate. Now, that's as opposed to services. It reckons inflation will be around 3% by the middle of 2025. Economic growth locally has also slowed, the Reserve Bank says, and is anticipated to be below trend for a couple of years. Higher rates, cost of living pressures, and falling house prices are all combining to slow household spending. And of course, the labour market remains tight. It is concerned about the cost of labour and potentially wages feeding through to higher inflation.
Okay, so the bank has indicated that there will be more rate rises. It'll be a very boring place if everybody just agreed. Is it the view of market economists?
It's pretty mixed. What I think is interesting, the last couple of years, the market economists have done, in some ways, a better job at predicting what's going to happen to interest rates than the Reserve Bank has itself.
Is that a little bit embarrassing for the Reserve Bank?
Well, this is the whole argument last year where they said rates wouldn't rise till 2024, and you had plenty of senior economists out there saying, no, they have to rise a lot earlier than that. It is embarrassing.
Yeah, there's really no way around that, is it? It is actually quite an embarrassing thing to have on the public record.
Yes. Now, certainly inflation data for the March quarter out in a few weeks is very important, and economists yesterday noted that the Reserve Bank talked about lags involved in monetary policy changes. Also, the bank said higher rates may well be needed, whereas last time around they said will be needed. May is definitely less equivocal than will. So, the tightening bias is towards another rate rise, Michael, but it's no sure thing.
All right. Now, it's not just a big day, Sean, for the economists and for mortgage holders. Local markets, how did the ASX 200 respond?
The S&P ASX 200 began the day by jumping. Then it fell pretty sharply until about 2:30 p.m, where the announcement came. It then surged again. By the end of the day, the ASX 200 was up 0.2% to 7,236 points. Plenty going on. The big banks were mixed, though Macquarie Group jumped more than 1%. BHP was off 2%, while Rio Tinto and Fortescue were both down 1%. The energy groups did well, with Santos up 3%. WiseTech Global was another strong performer. Not a lot of corporate news out there yesterday. Online recruiter Seek came out and said its financial year revenue will be about $15 million lower than forecast as job ad volumes soften. Perhaps that's a hint towards the labour market in the future. Its share price finished 1.5% lower.
All right. International markets, what's going on?
Well, gold prices pushed above $2,000 an ounce yesterday. That's the highest in more than 12 months. It certainly helped the local gold miners. Newcrest was up 3%, Gold Road, Northern Star, a bunch of them rose yesterday. Oil prices held on to their gains of earlier in the week. Not good news for we consumers of petrol. Lithium prices continue to fall, Michael. They're trading around $33,000 a tonne. What's that mean? Well, it's about half the price of its peak in the middle of last year. It's an important commodity in Australia because we have so many lithium miners, and it's a metal heavily used in green energy and batteries. Hence, some of the worst performers on the ASX yesterday were the lithium stocks. And Michael, the Aussie dollar jumped sharply ahead of yesterday's rate announcement before coming back just a touch. It's currently trading around 67.6 US cents.
All right, big day. We'll be back in a moment with the rest of the day's business news. Sean, ANZ's bid for Suncorp's banking assets took a blow yesterday after the competition regulator said it needs more information on the deal.
The Australian Competition and Consumer Commission wants further submissions, particularly the extent to which a deal will impact lending rates, deposit rates, fees and charges, consumer choice, service levels and innovation. The ACCC Deputy Chair Mick Keogh said the home loan price inquiry reports of 2018 and 2020 show competition between the biggest four banks has been, at best, muted, and any acquisition of a potential rival by one of the major banks must be closely monitored. Now, a final decision is due June 12, but already there's been plenty of criticism of the ACCC. Looking back to pre-COVID times to judge competition in a market may not be optimal. That's the theory anyway. And also, Michael, another corporate takeover underway is Andrew Forrest's Wyloo Metals bid for Mincor Resources. Yesterday, the Mincor board backed the $760 million offer, conceding that the company is at risk of not being able to make debt repayments as it struggles to supply nickel to the specifications of its sole customer, which is BHP. Hence, it's taken up Andrew Forrest's bid.
Sean, Melbourne-based skincare group Aesop has been sold by its Brazilian parent Natura to global giant L'Oreal in a deal that values the Australian company at $3.7 billion.
Yeah, not bad for a company that started in Melbourne back in 1987, now worth $3.7 billion. The deal, the largest for any luxury brand in Australia, is tipped to close within 6 months, according to a report in the Financial Review. Natura said the deal will allow it to get rid of some debt and focus on Avon and the Body Shop businesses, which it also owns. Aesop, of course, is famous for using plant-based ingredients. It's been the star performer within the Natura group. L'Oreal CEO said the purchase will help the company unleash, and let me quote, massive potential growth, notably in China and the all-important travel retail business.
Don't you love any CEO who uses a term like massive potential growth?
Massive and potential. They just don't go together, do they?
Oh, extraordinary. And it's worth mentioning as well, Sean, we released an interview yesterday morning with Rodrigo Pizarro, who is the local boss of L'Oreal, and this was recorded just before this deal was done. It is worth a listen, though, just for an insight into that business, because it is really quite a remarkable global business with a really strong Australian presence. And he's a fascinating individual as well, speaks many languages.
Yeah, I mean, it's a very innovative way of running a workplace. That's what I took from the chat with Rodrigo. Anyway, well worth a listen.
I would completely agree. Now, Sean, the federal government is banning the use of TikTok on government devices following advice from intelligence and security agencies. You're not on TikTok, are you, Sean?
Oh, mad TikTok user. Should see some of my dances.
I would pay a lot of money to watch you dance on TikTok.
Well, you just have to search my alias and you'll see me. Attorney General Mark Dreyfus said the directive will come into effect as soon as practicable. Victorian Premier Daniel Andrews followed suit, banning TikTok on government-issued phones and computers in that state, saying they posed a risk to national security. TikTok is owned, of course, by Chinese company ByteDance. Governments are worried that ByteDance might give the Chinese government sensitive user data gathered via the TikTok app, such as location information. Or the flip side is that the Chinese government could interfere with content recommendations on TikTok. A bunch of countries have already banned the use of TikTok on federal communication devices. That includes India, which was the first one to do so, the US, Canada, the European Commission, and New Zealand.
Do you remember a couple of weeks ago, Sean, in our weekend edition, I nominated this as a sleeper story because it was happening overseas. It was happening in the US and in Canada. And I said, this is a sleeper story because I reckon this could happen in Australia as well. And I don't remember what your story was that you nominated as a sleeper story. But whatever your story was, beat mine. I'm going to appeal this decision with our colleague, our Fear and Greed colleague, our adjudicator, Adam Lang, when we roll around to the weekend edition this coming weekend.
Fair enough. Well, let's bring it up with Adam. But clearly, I mean, he's a judge with impeccable track record. So I'm sure he was right.
He has an impeccable track record when you win, and all of a sudden when you don't, you should just the sledging on the Fear and Greed WhatsApp message. Anyway,
exactly.
All right, moving on. I get distracted. I get all angry. I get all riled up when I think about injustice being done to me. Sean, the head of Treasury, Stephen Kennedy, has hinted that financial assistance to encourage mothers and the jobless to work more may need to be funded by a reduction in tax breaks for investors.
The federal government is due to release an employment white paper in September, and according to a report in the Financial Review, Dr. Kennedy told a conference on Monday that the tax transfer system was discouraging secondary earners and people on government benefits from working more. Any move to fix this situation by relaxing income-based means testing would cost the federal budget billions of dollars. But Dr. Kennedy pointed to a potential savings from the relatively light taxation of non-wage income, i.e. investment income. So Dr. Kennedy has a bit of a track record of bringing up issues that then appear as government policy. So it'll be interesting to see whether in the budget in May, the government does anything around taxation of investment income.
Super Retail Group's founder and non-executive director, Reg Rowe, will retire from the company's board effective immediately after 50 years in the job.
Yes. With his late wife, Hazel, Rowe founded Super Retail Group's original business in 1972 as a mail order business. He served as managing director until 1996. He was chairman from 96 to 2004 before becoming a non-executive director till yesterday. Now, he owns about 30% of the company. Of course, the brands include Rebel Sport, Macpac, BCF and Super Cheap Auto. It operates 716 stores in Australia and New Zealand, all from a mail order business back in 1972. As Rose said yesterday, 50 years is a good innings. I agree.
I think that's outstanding.
Well done.
The Victorian government yesterday, Sean, lifted the public sector wages cap from 1.5% to 3% per annum, but that is unlikely to appease unions.
Especially since the newly elected Minns government in New South Wales has promised to abolish that state's 3% cap. Unions in New South Wales are already pushing pay claims as high as 7%. Victoria, like most other states, faces challenging times with its net debt expected to top $100 billion when it's released at the May budget. Government departments in the state have been asked to cut their budgets. Meanwhile, the New South Wales Premier yesterday announced his cabinet of 22, which includes 11 women. That's 50% women if you exclude the Premier himself. Labor won 45 seats in the election 10 days ago and has gained the support of 3 independents to get its majority in the 93-seat House. What I do like about that election is that on the night, Labor had won 47, which gives it a 1-seat majority. It's down to 45. So it's one of the few elections you see that they actually start losing seats once postal votes and things like that come in.
The longer it goes on, they're just going, please stop counting.
That's right. Exactly.
And finally, Sean, you've got an update for us on the collapsed building company Porter Davis.
Liquidators Grant Thornton told 500 affected customers in an online webinar yesterday that they are investigating the causes of the company's liquidation as well as the timeline of its decline and will deliver a report to creditors by mid-April. There are hopes that there will be a white knight. Someone will come and take over the company. Now, more than 1,700 homes across Victoria and Queensland are currently unfinished after the collapse.
In international news, Sean, Donald Trump is expected to hand himself into authorities early this morning, Australian time, for booking and a likely arraignment in court.
Could be happening as we speak, Michael. Now, Trump supporters did turn up, particularly when he drove from Mar-a-Lago in Florida to his Boeing 757 with his name emblazoned on it. But there weren't huge crowds, and there certainly weren't huge crowds in the very democratic city of New York. That city boosted security for his arrival. Trump, of course, is the first former president to face criminal charges. And before he left Mar-a-Lago, he posted the words "witch hunt" in capitals, as is his wont, on his social media network. Mr. Trump is facing multiple charges of falsifying business records, including at least one felony offence in the indictment handed down by a Manhattan grand jury last week. The investigation is scrutinising six-figure payments made to porn actor Stormy Daniels and former Playboy model Karen McDougal.
What do you reckon the scene would be like when he walks in to, I'm assuming it would be a police station to hand himself in?
Yeah, it's the Attorney General's office.
Oh. So they're probably not going to take I was hoping for like a scene out of The Bill, and they go, "Oi, you're nicked." I want to hear the words, "You're nicked."
You're nicked. He'll be wearing, the blue suit, red tie. He'll have the wavy hair. He'll wave at people. What has been interesting up until today, at least, he has been very, very quiet. And I was watching quite a bit of the coverage from the left and right wing media yesterday out of the US. And one thing they all agree on, even the right wing media, is it's best if he just says nothing.
I thought you were going to say they all agree that his tie is a bit long, because you know how his tie is always about 2 inches longer than it's supposed to be, because it's supposed to just touch the top of your belt buckle. And his is always kind of halfway down his fly.
Yeah. I don't know what that says, Michael, about him or you, really, that you notice that.
I'm sure I'm not the only one, Sean. One of the big global deals at the moment is Glencore's offer for Canada's Teck Resources, TECK, which is a coal company, not that you'd be able to tell that from the name. Glencore has offered $23 billion US, making it one of the largest bids of the year.
Teck's rejected the bid, though most analysts think there's another one coming. What's interesting is that Teck Resources wants to split into two, a steel-making coal business and a cleaner metals asset business. Glencore, one of the biggest resource companies in the world, has always argued against splitting off renewable assets and fossil fuel assets. Now it wants to buy Teck and follow the Teck strategy, i.e. splitting the renewable, the cleaner assets, from the dirtier assets. Now, the natural extension is that Glencore, which owns 25 mines in Australia, could do the same thing. The takeover is interesting. What happens to the Glencore strategy is even more interesting.
Finally, Sean, public e-scooters seem to be taking over the world, with complaints from Melbourne and Sydney through to North America and Europe, and now Paris has voted to ban them.
90% of residents who turned out to vote said they didn't want shared e-scooters in their city. And so when Paris's 3 operators' contracts expire on 1 September, they won't be renewed. Only 8% of those eligible turned out to vote. Now, the referendum was in response to the rising number of people being injured or killed from e-scooters. In fact, in 2021, 24 people died in scooter-related deaths in France. Paris is the biggest city so far to kick out rental scooter operators. It's also been a major issue in other large cities, including Melbourne, where there's a real backlash against them.
Have you used one, Sean?
No, I haven't. I'd love to.
It's great fun.
Is it?
It is actually really, really good fun.
I'd be flying around on an e-scooter. They do go up to 24, 25 kilometres an hour. And that's one of the big complaints, is that when they're on the footpath, they're just going too fast.
Hooligans. Hoons just knocking people over.
Scootigans or something, yes.
I don't know whether that's going to catch on, Sean.
No, didn't think Mia would either.
No. Hey, but speaking of Mia, I have a Mia, a most enthusiastic advocate.
We're going to do 2 today because we didn't do one yesterday. And so we're going to do 2 today. You've got one and I've got one.
Well, who's yours first?
Mine is Rachel, who listens to us most days from the Central Coast of New South Wales. She actually got in touch with me and used the acronym MIA, which was kind of when I thought, Wow. This is a very, very sort of credible person, intelligent, using the MIA acronym. And I think, this might have legs from here.
That's amazing.
Yeah. She actually asked whether she could be a MIA, and absolutely.
Oh,
Rach, you are my favourite MIA today.
Well, you know what? I'm going to save mine for tomorrow because that's too good. To actually have someone contact you, proactively say, I am the MIA, look at me.
The most enthusiastic advocate for those who don't know what a MIA is.
Yep.
The most enthusiastic advocate of Fear and Greed.
Yep. Terrible acronym, but great concept. Up next is the Fear and Greed Daily Interview. Diana Messina, Deputy Chief Economist at AMP, is your guest today.
All about yesterday's rate pause. Plenty to talk about in that.
Yeah, there sure is. It's a really good chat. It's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Also today, of course, Sean, being Wednesday, there is a new episode of How Do They Afford That, which is our sister podcast featuring me and Canna Campbell from Sugar Mama TV. And this week, because in all different parts of Australia, we've got school holidays kind of kicking off and Easter long weekends, etc., we are looking at entertaining on a budget. What things that you can do with kids, things that you can do with family, or things that you can do on your own that aren't going to cost a huge amount of money when household budgets are pretty tight. So it's probably worth a listen.
And I've got to say, the show, Michael, the podcast between you and Canna has done really well. The numbers are growing. More and more people are listening every week. It is a great listen. So anyone on school holiday, any parent on school holiday, any child on school holidays should take a listen to this week's.
Oh, well said. Thanks, Sean. Yeah, it's available wherever you listen to podcasts, and I'll put a link in the show notes for today as well. Thank you very much, Sean.
Thank you, Michael.
It's Wednesday, the 5th of April, 2023. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, Twitter, and Facebook, and you can stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. All you need to say is, Alexa, play the Fear and Greed podcast, and the latest episode will just start playing for you. And you can grab yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.